Hello.
Awesome.
Hello.
I think we're good to go very early in the morning on a Wednesday. So the room's yet to fill up, but I think there's a lot of energy on stage that we really want to capitalize on. More importantly, the topic for the day I think is very fascinating. It's one that's been very underspoken of, and in my brief experience of attending multiple events, this is the one panel that I get to host and be a part of on this side because I don't see a lot of conversation around exits. And so we have three people who can shed a lot of light on it. What we're going to uncover through the next 40, 45 odd minutes is pretty much semantics around how exits take place in the ecosystem, where there are two founders who've gone through multi-bagger exits and an operator and community person who's seen a lot of exit offers. He's also held hands when exits happen of team members. To get us rolling, I'd love to start with Gaurav. Gaurav, you exited Picker and got acquired by Shiprocket at a time where many would say that the trajectory was great. You were growing at multifold speeds, but you decided that that was the right time. Talk to us about how do you come to that conclusion? Ki, this is the right time. This is how you reason it out, and maybe just talk to us about that why.
Hi everyone. So as per your question, Jivraj, so it was a situation where, uh, I think I should give an intro about Picker or you can just
A
want
brief
me to?
intro can help,
Yeah,
yes.
okay. So hi everyone, yeah, so Picker is an operating system to run an e-commerce channel, specifically for, the logistics and supply chain part. Now we are getting into a lot of, conversion tech and, expanding it not only in India to outside India as well. So we were in around Jan or Feb, we were in a situation of a Series C fundraise where we got multiple term sheets and our Series C fundraise was about to close. And then an acquisition offer came up, which was on a 20% premium above the Series C valuation that we were getting. And it had a good liquidity as well. Not only in terms of stock, basically in terms of cash as well. So, that point of time, the situation was like it said, that, raise money when you are at your peak or, the best time to negotiate for any kind of, a sale is when you are at peak or when you are at the, best of the product that you are selling. So that was the time for us. The Picker was growing almost 10 to 12% month on month. We almost had a trajectory of 1 crore to 35 crore monthly revenue in 18 odd months. We almost hired from everyone. So on talent point of view, on sale point of view, on team building point of view, on strategy point of view, we were like literally at the peak. And at that point of time, we had, this leverage of, getting a lot of investor traction as well as, strategic sale offers as well. And eventually, for the macro thing, we decided that, combining with Shiprocket makes a lot of sense, not only for today, but for a 3 to 4 year view, like post this acquisition. And since, we both were almost similar products and depleting each other's margin, so combining makes a lot of sense, and there is a 4 to 5 rupees per order gross margin on the table. And also for teams as well, it was very lucrative. And for investors, it was a win strategy, like almost getting 20, 25x for in like less than 2 years and 150x in 4 years. So, and totally liquid. So this was the thing that came up and we took it.
Got it. No, I think it's interesting how you mentioned the emphasis on how much it goes back to the founders, how much to the investors, because that's what we're in the game for eventually. Coming to Arjun, I think it's fascinating the timing of when you sold as well, right? Many would say that it was Dr. Vaidyas was speaking, you were doing multiple thousand orders per day, and it was growing in incredible lengths. And I remember when I heard of it, I was like, what? So I'm sure you got a lot of such reactions yourself. Talk to us about behind the scenes, right? What was happening? What was your thought process? And what led you to that conclusion that, okay, we'll go ahead and now sell?
Yeah, so look, maybe before I talk about that thought process, I'll give all of those in the audience who don't know about Dr. Vedyas a quick intro. So my name's Arjun. I built a company called Dr. Vedyas from zero to India's largest Ayurveda brand online. My family's been in Ayurveda for 150 years. So while the business was not a family business, it was a family legacy. And so there was a lot of emotion in the process of exiting this business because it had been with our family for a very, very long time. The formulations have 150 years of our family's legacy and our family's history in it. The reality of the business was that after my dada passed, he had cured me of asthma, and so I promised him I'll do something with his legacy, and I started a business to take forward his legacy in a new age avatar and use the power of online to scale. Uh, for us, we had a really tough start to the business, as most founders do. But once we started hitting PMF online, we were the first people to execute in that space, and so we got very rapid scale, as similar to the sort of pace of scale that Gaurav was talking about. COVID was also a good period for us as a business because we were Ayurveda, we were already market leaders, and we were online first. And so we had this huge bump up of sale in the year 2020 where we grew 7 times in sale in that sort of 7-8 month period. I would say that before I talk about why we chose to exit, I think fundamentally if you think about exit, and I get lots of questions on exit because we were early on in the journey to take the decision. People ask like, how do I build a business so I can exit? The reality is that I'm sure I can speak for Gaurav as well when I say that we did not build these businesses to exit. We built these businesses because we were passionate about these businesses. We wanted to create value and we loved going to work every day. You build a really good business and then various options come along the way. Exit could be one of them, right? So never build a business for exit. From our perspective, actually, I would say that when I get asked this question of why that time, why do you choose that time? I think it's a very, very personal decision as well. So if I would have talked to 100 people about wanting to exit, 95 would have said, really? That's happening. But 50 or 40 would have said, oh, actually it makes sense, it's the right time. And the other 50 or 60 would have said, it's too early, there's so much upside left, there's so much left for the brand, right? And so I guess nobody can take that call to exit except the founder. And the right time to exit for me was the right time to exit for me. May not have been the right time to exit for you, or for Gaurav, or for Suhas, but for me at that point, it just felt and seemed like the right time to exit. And I think that's really important when we think about this, because while it's not talked about enough, there's 2 paths to an exit. There is one which is the offer, the monetization, the outcome, and the other part which is where in your life are you and are you okay to let go? It's not easy to let go, but letting go is a very, very personal decision.
Fair enough. No, I think that's insightful from the lens that it has to be an individual decision, yet you have to reason it out and you can't have too much emotion attached to it.
And I'll tell you one other thing, Jivraj. When you do an exit, or when you do go ahead with an exit, you'll get lots of random feedback as well, right? And some will come directly to you and some won't. So a mentor of mine from the D2C space, who I value a lot, and who speaks to me openly and freely without bothering what I say, said, Arjun, you got greedy. And I had to take that, right? And I heard other rumors that like the business was not doing well and so they sold it and all of that, right? And you have to deal with all of this as well. But as long as your conscience is clear on why you've taken the decision, I think you're in a good place.
Absolutely. No, I think that's super helpful. Coming to Suhas, and you've built a product which is over 1 million downloads now. This is a productivity explorer tool, right? Indistractable. And you said no to some of the offers that were coming by your way. This is a 2-person team. This could have meant a lot of wealth for the 2 of you as co-founders. You've also built a community, the product folks, which helps, give you an insight to what people think when exits happen. What do you think is the sentiment when an exit is taking place, and how do you say no to lucrative offers if they were such?
Absolutely. First of all, super excited to sit in front of all of you all, and of course share the stage with 2 founders I really look up to. And Jivraj, of course, one of the moderators we all look up to, right? He runs a fantastic, fantastic podcast. Most of you all might have come across. A little bit background, my name is Suhas. Like Jivraj shared, I currently run definitely the community called the Product Folks, which is Asia's largest volunteer-driven product management community. It is over 150,000 strong, so definitely check it out in case y'all are in the product space as well. My full time is with Indistractable. I co-founded this a year ago. It is the world's fastest growing productivity OS, like we love to call it. Started off with an Android launcher, which is at about 1 million downloads. Just 2-member team so far, but we're definitely hiring. We've also launched a Chrome extension. The best part about fast-growing companies, communities, or products is that it definitely draws a lot of eyeballs, right? You are going into a space where there are larger incumbents, maybe sometimes it's a new space, but there is definitely, the best part about growing fast is that it attracts eyeballs. While haven't really taken up an offer, with Indistractable, we had a very interesting conversation with a large ad conglomerate based in India, right? The only problem, we couldn't take it, and ours is a Indistractable. Like the name says, ours is a distraction-free launcher, so we couldn't collaborate on moral terms. But I think the sentiment here of saying no early on in the journey is that we feel we have a lot of upside left, right? Like Arjun shared earlier, I think it is very much on the founder and the team. From the outside, there is no one to say yes or no. And every exit or every conversation, I think, is very contextual. There are so many nuances in this which do not come out in the public forum. Hopefully, we'll be able to discuss some of these today. But I think the decision of making that exit should solely lie based on your founders, your team, your investors, right? I think that nuances is something that a lot of people miss out in the ecosystem, in the community. Lots of stories that go around. But as a small group here that we are, I think let's definitely dive deeper into that.
Absolutely. No, I think that's very, very helpful. Also, since we have, a bunch of you here, we'd love to make this interactive, a lot of energy here. So we'll open it up for questions in the limited time frame that we have towards the end. So prep yourself, if at all, get curious, and we'd love to entertain more questions from the audience. I don't want to be a bottleneck. Going further, I think I love going strategic in some of these panels. And so if you had to discuss some of the nuances to the extent that you can share of how these negotiations take place, right? Because from the outside, it looks very daunting, if I were to put it that way. How do you decide? How many conversations do you have? What do you discuss? How do you decide on a price, etc.? Maybe coming to Arjun first, if you can share light on, how does some of this work? Do you talk to multiple people? What is the price? Like, how do you negotiate, right? Tell us about that.
Yeah, so actually ours was quite different from other situations, because when our investor, RP Sanjeev Goenka Group, invested in the first instance, we actually figured out for the next 5 to 7 years all the permutations and combinations, further funding rounds, and prospective exit outcomes on day one, right? So that initial investment took a lot of time, because it was not just a primary or a primary plus secondary at one moment of time. It solved for a lot of permutations and combinations going forward. I think for me it was an absolutely amazing experience. While we had met other people, spoken to other people, when we decided to go ahead with this team and this investment, I was 26 and a half years old. I'd never read an SHA in my life. I didn't know what reps, warranties, indemnities, all of these things meant. And so I had a trial by fire pretty much. I walked into this room in this large lawyer's office. I had my 1-2 people from my legal team, and I didn't have a CFO or an internal legal person, so I borrowed those people from my dad, and I entered this room with 5 M&A professionals and 6 lawyers on the other side. And I think the amazing part of that experience was that actually, because they had done this many times before, they said, look, you can complete an SHA within 40 to 50 hours. There's 2 ways to do this. Either you do it over a month and back and forth through various emails and calls, or we sit together this weekend in this room for 40 to 50 hours and get it done. And so we sat for 3 days and got that document done. I remember on the 3rd day, it went into the night, and I left that office at 7:30 a.m. to reach home at 8 a.m. But I think that the fact that we sat down we said, nobody's leaving here until we close this. It taught me a lot about give and take in negotiation. It taught me a lot about, you know, when you think about a negotiation as well, you think about, hey, I want all of these things, and I want to leave this negotiation feeling like I've won. The best negotiation is where both parties walk away feeling like they've won, and both parties walk away smiling, saying, okay, it actually worked out. And so what I learned from the lawyer who was working with me, who actually went to school with my dad, is he said, Arjun, I need those 3 to 5 points that are non-negotiable for you, that I will fight tooth and nail, and if we don't solve for those, we'll walk away. But for the rest of the points, let's be pragmatic, because both parties' endeavor is to get this done. If we are in that room thinking, do we want to do it or not want to do it, that's a different story. But if you actually want to do this, and so do they, let's choose our points where we're non-negotiable, and the rest, let's be pragmatic and move forward. And so I found that taking that commercial approach to solving the problem, talking openly about what your issues are and what your fears and apprehensions are, really helped with that process. But I think more than that, that entire negotiation process set me up for, one, understanding law in relation to SHAs, SSAs, etc. But also really the interpersonal interaction of a negotiation, and sort of getting things done where both parties feel that they've got what they wanted.
Got it. Awesome. No, I think that conclusion is a very good segue for Gaurav, because I know that he's often mentioned that when Picker and Shiprocket, when the acquisition took place, both of you are like very happy. Both sets of co-founders are very, very jolly about it. Talk to us about that pre-stance, right? I know you've been very candid before in mentioning numbers. If you can shed light for the audience to, you know, how some of these negotiations took place, what were the numbers, how did you get the price that you wanted? Because there's a backstory that for 1 year, you were negotiating on the price with Shiprocket, right? Like they given you multiple offers. Talk to us about some of those things.
Okay, hi. So Jivraj, actually, there was no offer yet, like there was no negotiation for a year or so. But you know, like the topic which Arjun also touched on, the SHAs and all. So I had almost 4 SHAs in last 15 odd months. So raised from almost 6 odd big funds, and all had different kinds of emotions attached. Every partner was different. One was an operator, one was a consultant, one was a kind of a product strategy guy. So dealing with multiple folks, and then managing, a fundraise as well as an exit opportunity was something very new for me. And, saying no to thousands of crores with a family income of 20,000 per month was also something very new for me. So this was one learning that I had around it. So like, the scenario was that we raised a Series A in December 2020. And then Series B started happening around March, and there was no reach out from our end. It was totally inbound. Then we started, that we are getting a lot of traction, we started reaching out to funds to build a pipeline for C. That point of time, Shiprocket guys approached us. We knew Shiprocket since Picker was a 7.5-year grind for us. Shiprocket was also in the market for nine odd years. And we both have seen a lot of struggle periods. Like there were a lot of common struggles between Picker and Shiprocket. So we knew founders really well. We gelled along really well. We used to meet at a lot of client meetups where both Picker and Shiprocket were there at present. So had some bonding with them. So we had then they had a conversation, let's merge, and why we are, churning out clients, why we are competing, why we have raised $200 million, you are raising another $65 million, and we'll be burning this $260 million on common clients. And eventually clients are taking benefit out of our fight. They are, diminishing our margins and all. So then eventually, then I said that, right now our Series C has happened, we see a lot of growth, and we see that, Picker will be a prospect of close to $400, $500 million in another year or a year and a half. So that prospect was very clear. Then, another thing was that suppliers started going against us. All the suppliers started, diminishing our margins. They started, like removing our SOPs. They started, pushing us a lot. But then also we decided that we are a very much a value-driven business built on, a lot of strong fundamentals and first principle thinking. So in a 2 months timeline, we were able to, we were able to surpass the threat of the suppliers, and we were able to build a much more diversified supply. And then that conversation of Series C even got more fuel added to it. That another two big, one very big sovereign fund and one very big tech established fund came into picture. Then again, Shiprocket came with an offer, and then you had a board of 5 to 6 people.
Yeah.
And all those 5 to 6 people, one was happy with a $60 million outcome, one was happy with 120, one was happy with 200, one was not happy even with 300. Then you will have to manage multiple people, and you as a founder, you have to take a call, like what Arjun said. It's your decision, it's your baby. You have to see that, the outcome that you are able to make, get out of it today versus 5 years down the line. Also taking into the equation the time value of money is very important. We stick to the basis. We eventually read a lot about, what is the best thing or not, but eventually we decided that the 3-year picture post this acquisition, if we are able to visualize it better, if we are able to place our team members into that picture, because, they just don't have to make money out of it. They have to, have a profession. They will have to continue with the same passion and growth like what they were continuing before with us. And it's our responsibility. And we continued with the Shiprocket team as well, growing Picker separately. So there was a lot of things on the table for us. And eventually, I would say the two things which went really well was gelling with the founders of Shiprocket. And second was the liquidity on the table.
Got it. No, that's awesome. I think that clarifies a bunch of things, and really like the sentiment on the panel here. Coming to Suhas, I would love to understand what Gaurav ended on, which is the team aspect of things, right? When an acquisition happens, unfortunately, it's not the team's decision. It's a decision which is on you, either yes or no. So when you're merging with another large sort of company, right, what have you observed the sentiment in the community to be? What do operators feel when an exit happens? How do you see those semantics play out?
Yeah, I think that's a great question. In fact, short answer there would be it boils down to the skin in the game, right? What I loved about Gaurav's answer, especially the note that he ended on, was about the team and how he actually actively at least thinks about them, right? I'm sure all founders do, but oftentimes, and let's be real about it, right? When you're starting the company, it is the founder who has the greatest risk attached as well, right? And it's a long journey, like Gaurav also mentioned. Many a times the employees don't, or employees who are working for the company don't see as much as the ups and downs. The founder, the leadership team usually takes most of these decisions. Many a time, I think what I'd love to see more in the ecosystem, at least from the sentiments of lots of community members we chat across, it's great when those who have been there early with you in your journey, it's great if they see a part of the liquidity as well, right? And we're seeing more companies now actively say, we're seeing more companies, we're seeing more communities, we're seeing more founders come back and help, your early team either with ESOPs, with, part of the proceeds go back to the team as well. As we see more of this happen, I think the ecosystem is only going to strengthen, right? There have been instances where some of these proceeds didn't go back to them, and there have been proceeds where that creates a little bit of a negative sentiment, because most of the founders do make a significant part of the exit, which is fair again because they've taken maximum risks there. But as and when that flows down to the employees, that's when we'll see the belief come back in ESOPs, right? Now we're seeing liquidity events, but for the largest period and we're still a very young ecosystem, right? If you compare this to the Valley, we're still a very young ecosystem. So if we see some parts of that proceed come back to the employees, these employees are the ones who are going to go and then start your next generation of companies, right? That is the values you want to pass down so that the next generation can then follow through, right? If they are not going to see a liquidity event, one, you're not going to see more companies come through. Two, lots of these in fact, Arjun, right after your exit, then you've joined a VC fund, you've been doing a lot of angel investing, you've been supporting the ecosystem. So stuff like that might not happen. So that is something that, many founders in our community at least are discussing actively. Some of them who are raising, try creating, decent ESOP pools there. Try following that through in case of a potential exit. I'm happy that at least the founder ecosystem is coming together and at least thinking about it, which wasn't the case a couple of years back in this ecosystem. And I'm guessing that's a function of how ecosystems grow, right? We're still very, very young. As and more we see more cycles of this, the ecosystem grow faster, and we bridge the gap between us and the West.
Absolutely. I don't think I couldn't agree more because that's so necessary to have mentioned, right? I think exits, a thriving M&A ecosystem is definitely testament to an ecosystem that's growing and nurturing by itself. And I think one of the last points to end on with the panel, I think to all three of you, will be in terms of how post-acquisition semantics work, right? There are very different pathways that Arjun has taken, that Gaurav has taken. Suhas, from a more community lens, has seen multiple situations play out. Arjun, from your lens, what was the thought process behind not continuing with Dr. Vaidya's post-acquisition? How was the sentiment within the team? What did people tell you, as you were referring to a bit, right? What was it like post-acquisition for you?
Look, I think for me it was a really emotional decision, obviously, because while Arjun Vaidya is now officially not part of Dr. Vaidya's operating the business, the name of the business is Dr. Vaidya's. And so my name and my family's name can never go away from that business. So it was a little bit of a emotional, complex decision. Yeah. But, given all of that, I think I just said that, like, if there is someone taking it forward and the founder's personality was so strong in the business, until I go, nobody else can take it forward, right? Or until Trisha and I go away. And so actually the longer I would have stayed, the more complex it would have been for the handover to happen. So for the benefit of the business, I actually kept the handover as efficient as possible. And so we handed over the business over 4 months and then eventually exited the business in April 21 and stopped operating the business. I think it's very nuanced and depends on the specific business, who the acquirer is, what their capabilities are, what help they need from the founders. One thing I did tell them is, I am here whenever you call me for Dr. Vaidya's. I live in Bombay. I continue to live in Bombay. That's where you operate the business from. Anyone wants to call me at any point of time, and I still get calls. And I take those calls. I'm not an operator of the business, but I'm a big customer still. I spend $100 a month on my medicine, or my family spends $100 a month on our medicine. So I think for our case, it made sense to not stay for a very long period of time. But I can understand cases where it made sense for people to stay and nurture and then eventually hand over.
Fair enough. No, I think that makes a lot of sense. I really love the point around how you have to distance yourself from the brand, right? It can't just be centered around you. Although Arjun's a huge proponent of founder-first brands, but when taking that decision, you have to leave yourself out of the picture and make a more calculated call for the business. I can speak personally. I was devastated to hear when I first got to know from a team member of Arjun's that, Dr. Vaidya's is being sold. I was like, how? But then over time, I got to know the reasoning, and that kind of made a lot of sense. Coming to Gaurav, right? You, after the acquisition, have continued to stay on. You're doing very well with Shiprocket. Continue to build Picker separately. And I've had the pleasure of knowing the three co-founders. You're all in great places. What is that ideology like? How has the team settled in when the two companies have merged together? If you can maybe shed light on how cultural differences also, or cultural similarities get merged post-acquisition, I think that'll be very helpful.
Yeah, it's a valid point as well. See, we were close to 580 odd people, and Shiprocket was close to 700 odd people. I think around 800 odd people. So these 1380 odd folks were not even required for, the entire bigger picture of the product. So we thought that, we will not churn out people. What we'll sell it, we'll try to, give an environment where people feel, and then they themselves, if they see that, there is a growth path, they will grow. Or else, they will find better opportunities. So this was one thought. Because, eventually we both were competing against each other very heavily. And a lot of people were employed just because of, that competition thing. Second thing was, for us as founders as well, the day you sell your company, the brand is almost gone. Now it's up to them whether they want to continue with the legacy name or they want to call it your brand by the acquired, the parent company. So that thing is for us, the day we took the decision, we thought that, let's keep emotions aside and think what's best for, the combined entity. So not only in terms of people, in terms of products, there are 15 odd products that we are building. There are 17 odd products what they are building, which product, which company should build. And we divided all those things semantically. And depending upon the talent mapping, that Picker had an enterprise DNA, Shiprocket had a long tail DNA, Picker had much more, focused on, conversion tech kind of stuff, B2B kind of stuff. Shiprocket was much more focused on extracting more and more from, current clients on the basis of products associated with the order transactions. So we, went to, a lot of depth into our business, and the way that, if there's a 5-year roadmap of product, can it be expedited to a 1.5-year, 2-year post this acquisition? So this was also one of the basis of this acquisition, and eventually we planned post-acquisition thing with this. Apart from that, as founders, we feel that, there was a lot of pressure and all those stuff when, when you are as a founder, you feel you go with a lot of things. Now you are much more focused. So it's more or less like a job, but with the thing that, till the time we are here, we are, learning new thing, we are gelling well with the founders. I think we'll add something to us, and then eventually for the team as well, everybody should get a, glimpse of, like majority of our team members had a glimpse of 0 to 1 and 1 to 10 kind of a journey. Post this acquisition, everybody will have a glimpse of a 10 plus kind of a journey, and with much more hands-on kind of a role. So these are the things that, we are battling out. And apart from that, overall, for me personally, it's going really good. So like had a kid 2 years back. He was born when, I was raising funds. So didn't realize how he turned 1. Now I am like even 2 as well. Now I'm realizing how he will turn 2 to 4. So that's something that, got added to me as well.
Awesome. Thank you so much for sharing that. I think that humanizes a lot of the acquisition process. I've been told we're running short of time, so I apologize for the lack of questions from the audience, but the speakers will hang out post the session. I have one last question for Suhas, and if we can conclude on a very quick note. When the exit happens and, things are out in the media, there's a lot of chatter, misinformation amongst everyone. If you can maybe just summarize the community lens to how acquisitions can have a positive or negative impact on the community, and how maybe founders can empathize the process better by maybe over-communicating, things like that, I think that'll be very helpful.
Yeah, no, completely agree with that. In fact, the reason the chatter happens is a chicken and egg problem, right? The founder, in fact, cannot share it beyond his maybe core team or even between the founders till it actually happens, because then you're giving a confusing signal. Many times founders want to be transparent with their teams, with their employees, right? Tell them what exactly is happening. But oftentimes it's not as easy, right? You also want to be sure about it before you pass on the message, because at times there might be great conversations going on that don't boil down to that final signature, right? So oftentimes every founder, I'm sure, wants to be super transparent with their employees, tell them what's happening, keep them in the loop on a lot of things. But this is where the chicken and egg problem happens, because of which there is chatter in the market, right? Sometimes some employees get a hint of it, spreads out in the market, and then it's Chinese whispers, right? Sometimes there's something happening in the market which gets picked up, and then news outlets, how the Chinese whispers happen. We all know how that comes out in the market. So I think, to be very honest, there isn't a black and white solution to this. It is always going to be gray. As founders, I think as employees, definitely empathize with the entire process. Market's definitely not going to be easy for the next couple of months as well. In fact, I was just having a conversation with an edtech founder going through a process like this, right? So it is not easy for founders as well. It is definitely not easy for employees since they don't have the entire clarity. But as much as possible, do keep that touch with your employees. Keep them in the loop. Of course, not on the specifics. It is not easy always. But keeping them closer so that they also know that, okay, hey, everyone's trying their best. That is something that I feel oftentimes just helps you navigate this a little better. Unfortunately, no black and white solution to something like this.
Got it. No, I think that's very, very helpful, and that ends the panel on a very, very great note. Thank you so much to all three of you for having a great conversation. Can we have a huge round of applause for all the panelists? It's great to have started a conversation around exits and continue it. Thank you.